In today's video, there's two different stocks that I'd like to take a look at. The first is DoorDash, and the second is Upwork. Both of these stocks have earnings as their catalyst, and that earnings catalyst brought both of these two names on our Volatility Box live scanner on the Overlap tab. The Overlap tab is the best of the best, and the fact that we had both of these stocks appearing tells us that, hey, we need to dig a little bit deeper. Now, if we start first with DoorDash, and we take a look at understanding what their earnings results were. EPS, first off, was a miss. We had negative 44 cents compared to analyst estimates of negative 42 cents. If we open up the live news, we get a little bit more context where we can see, if I open up the Barron story right here, we can see that DoorDash reported second quarter revenue, which was up 33%. So this is good news. We can also see their total orders were up 25%. This is also good news. The company also said they were getting much better at matching the orders to the right drivers, so they're improving and increasing their efficiency. However, it's still hard to beat the fact that the company still lost money this quarter, so still losing money, and that doesn't really help in this environment. And EPS was still a miss. So if you had to say what was the overall sentiment of DoorDash's earnings, you could argue that that was staying neutral to negative. Now, if we contrast this with Upwork, you'll see a little bit different story. Upwork here, we can very easily see, had a nice gap up. The stock was up more than 44% as a result of its strong earnings. EPS was negative 3 cents compared to analyst estimates of negative 10 cents. So EPS was a beat. If we open up the live news to get a little bit more context here, we can also see that inside of Upwork, we can see that the company reported better than Q2 results. They raised their guidance above analyst estimates for both the EPS outlook along with their revenue. Earnings was overall very positive in Upwork. So now, if we take a second to summarize the two different companies, inside of DoorDash, we had more of a mixed bag of results, so let's call it negative to neutral is what we assessed. Upwork here, we can see the opposite, where Upwork reported very positive earnings. So if you had to essentially divide these two, this is how I would do that. Now, coming in with that bias, let's start with seeing Upwork's price action first. This is intraday price activity. We had price action in Upwork have initial sell-off in the morning. The sell-off was between that 6:30 to 7 a.m. mark, where price fell into the aggressive and the conservative volatility box levels. That's where it appears on our live scanner right here. You can see conservative long side entry. So now we know that we have an edge inside of Upwork. We have a volatility edge to go long in a stock that's otherwise reported very good earnings, and we're getting a better entry price than what we otherwise typically would get. This is our edge right here. We can see momentum show signs of shifting with the 3 EMA crossing above the 8, and we can also see our oversold confirmation kick in a little bit after that. So here, the key idea in Upwork is we had strong earnings, initial profit taking. That profit taking is the opportunity when price hits the conservative volatility box here, and that then reverses to hit the other side's conservative volatility box as the day progresses. So this rally right here inside of Upwork is what we're looking to take advantage of. Now, if we contrast this with DoorDash, you'll see a different story. DoorDash, we said we had more of a neutral to negative bias on. In the morning, we had a rally in DoorDash, and that rally started to stop as we hit the aggressive volatility box. This is where we start to see folks first taking their profits. This was that first profit-taking run. Then we see a little bit more choppiness. We try to break above this previous high, fail, get a double top, and that double top is what gives us that final profit-taking inside of DoorDash, which then leads to the sell-off to close. Now here, if we take a look at what the signs are that price action is showing us, we can see inside of this entire period, there's a lot of chop. And in fact, this took place essentially from, let's call it 7:30 a.m. Pacific, all the way till about 9:30 a.m. Pacific. So this was 2 hours of price essentially just chopping around sideways before we finally start to see selling kick into full gear. Funny enough, towards the tail end of that lunchtime hour, where funny things tend to happen. So this is why I think both of these stocks stand out, and you'll continue to find more and more stocks as we get into peak earnings volatility here. In today's case, the two stocks which stood out were Upwork and DoorDash, both of which had earnings volatility as its catalyst. DoorDash, again, we saw a mixed bag of results compared to Upwork, where we saw very positive results. Upwork, we were looking for any excuse to buy, and DoorDash, we had slightly negative bias, but really more neutral than anything else. No bias one way or the other. We're just looking for a volatility edge here. So hopefully through today's video, for all of our stock volatility box members, you recognize how to use the live scanner to give you this running list of stocks as the day progresses. And you should find more and more earnings opportunities as we get into this peak earnings season here. You can then see how that translates to intraday activity. And for those of you that would like to trade this on a more swing trading basis, you can even do things like load in our post earnings indicator, which for all Volatility Box members, you can download for free on our website, tosindicators.com/earnings. And there you'll find the post earnings analysis indicator, which lets you see, well, what are the patterns 7 days after earnings? In DoorDasher, we can see that 30% of the time, price tends to rise, but 70% price tends to fall. We only have 10 data points here, though, so not a whole lot, but Upwork gets a little bit more interesting, with more than 79% of the time price tending to fall as 7 days after earnings progresses, and we can see this massive gap here inside of Upwork. I hope you're enjoying trading this earnings season. Take care, everyone. Good luck trading, and I'll see you in the next update.